I mean, the U.S. is not having a great coronavirus crisis. One would have to say the disparity of treatment across different states is certainly a contributory factor that complicates any attempt to get it under control. So, and of course, the lack of clear direction from the center makes matters worse. So I think the U.S. market is being rather too relaxed and taking not really enough attention to what's happening there and the economic and financial implications. Whereas in Asia, I think that the result is very different. You've got nationally enforced policies, albeit with regional variations, very severe occasionally lockdown measures to clamp down on any resurgence of isolated incidents, although you could say Beijing isn't that small, but isolated incidents like the resurgence in Beijing get dealt with incredibly fast and incredibly punitive measures. But the U.S. And the market there just don't seem to mind, and I think that is going to come back and bite both the economy and investors.
So what does the bite look like for investors if equities are perhaps running ahead of fundamentals still? What's the downside risk?
Oh, equities are way ahead of fundamentals and completely looking past the short-term damage. Yes, there's an enormous amount of liquidity being flushed through the system in the U.S. and people who are unemployed are earning more money sitting at home than they were when they were working, which is an extraordinary situation, and at some point there's going to be a bill to pay. I mean, equities, if you look at any kind of earnings or valuation comparable to history, they're 25, 30% overvalued at the moment. But you can't make too general a statement because some sectors obviously are flourishing, whereas the vast majority will be suffering.
What about gold sitting at an 8-year high? Bank of America sees that at a record high this year.
Yeah, me too. I mean, look, whatever else you can say, you've got to have some of this stuff for insurance. We've talked about it before in the past. Physical gold is complicated and bulky, but there are plenty of nice places where you can have a little. Equities are tricky to pick individually if you're an individual investor, but there are some perfectly good funds and even one or two exchange-traded funds which hit the spot nicely and can be used. And I think anyone who doesn't have some in their portfolio today is making a big mistake.